G'day folks, welcome back to another update for natural gas and its ETFs. Well, natural gas has resumed long positioning after a couple of dips. Before we go any further, make sure you hit that like and subscribe button to support the channel. Let's look at the outlook first off. For natural gas demand, as of today, January 16, natural gas prices have risen, driven by increased demand from AI data centres and a forecasted cold snap. With the ETF performance, BOIL aims to deliver twice the daily performance of the Bloomberg Natural Gas Sub-Index, making it suitable for short-term traders seeking amplified exposure to natural gas price movements. KOLD seeks to achieve twice the inverse daily performance of the Bloomberg Natural Gas Sub-Index, appealing to traders anticipating declines in natural gas prices. UNG tracks daily changes in natural gas spot prices through near-month futures contracts, offering investors direct exposure to natural gas price fluctuations without leverage. In terms of the outlook, high volatility in leveraged ETFs like BOIL and KOLD makes them suitable for short-term trading only. Investors are also monitoring geopolitical tensions and seasonal weather impacts on natural gas prices. In terms of the AI data, the surge in AI data center operations has significantly increased electricity demand, with projections indicating that data centers could account for up to 21% of global energy demand by 2030. This growing demand is contributing to higher natural gas consumption for power generation. First, looking at the natural gas commodity price, we always look at the long-term trends first. I've got the monthly, the weekly, and the daily. So on the monthly, what these moving averages first off on the chart, and for those new to the channel, you can find that reference on how to draw these on your own charting software in the description below. So when the price breaks above the moving averages and also the CCI breaks above its respective moving averages, that gives us a bullish signal. On the weekly, it's been bullish now for some time on the CCI and also the price, so bullish on both the monthly and the weekly. However, on the daily, it's hit this resistance up here, a minor resistance at 38.78 and a major at 40.60, and it's still making further upside at the moment towards that minor resistance, so just be cautious of that. We've had a bit of a bullish move in the last few days, but we may see a bit of a pullback possibly towards this ascending diagonal trend line. So again, just be cautious of that. Also, just note as well, we did have this lower highs on the CCI, almost a double top on the CCI versus higher highs on the price, and that's actually pulled back. Now, if I to draw a Fibonacci, this is the daily chart, back to that low before the divergence started. We expect it to reach at the very minimum that 23-38% level, and you can see here it's actually bounced down towards the 61% Fibonacci range. So it's already hit that range. Now if we go to the intraday chart, remember we always trade in the direction of the higher time frame, so I've got the daily here, so this is the hourly. So if you're trading on the hourly, we only take long trades in the direction of the hourly, no short trades. So you avoid going long during this little dip. You only go long when the CCI is above the moving averages. Now you would have taken a long entry there, for example, and you would have got out of that trade on that when the CCI broke into that moving average range at the close of, oops, let me just make the ruler. That would have been from the close of that hourly period, and got it out of it at the close of that period there. That was a 2.19% gain in 11 hours of trade. At the moment, the CCI is dropping and it's turned bearish, so avoid going short. Remember, the daily is bullish, so we only go long on the intraday time frame at this point. So next, look at BOIL. On the monthly, it's below its moving averages, so it's a bearish momentum. There's no CCI for it. On the weekly, we did have this very long-term bullish divergence versus lower lows on the price. It's actually broken higher. Now, I'd like to see these moving averages on the price widen like it did back during this period before starting to go long, especially I'd like to see it break above those previous highs. But at the moment, it's giving us a bullish momentum on the CCI. Again, I'd like to see that confirmed with a bit more, with a bit higher prices. On the daily, we'd only be going long in the direction of the weekly. So on the daily, you can see here it's already broken up past that previous high since our last video, and the CCI is still rising. So had you gone long on that candle there, you'd still be nicely in the trade with a 26% gain on the daily price chart since that opened back there. Now going to the intraday chart, remember we're going long only if you're trading on the 1 hour time frame. You can interchange this with your own time frame, by the way, 2 hours, 4 hours, etc. So we only go long since the 8th of January during this period, and I've drawn here a little measurement tool. So from the close of that candle, when the CCI broke above the moving average, and so did the price, we close it when the CCI breaks down into that moving average range at that point there. So that would have been a 16.5% gain in 15 hours of trading avoid going long or short during this period, and go long again once that breaks above there. So you would have gone long on the close of that candle, and at the moment you'd still be in a trade just shy of 7% gain. The CCI is still bullish, so avoid closing it until that breaks into that moving average range. So for KOLD, remember this is the inverse. That's broken below the moving averages of the monthly, giving us a bearish signal. There's no CCI drawn for it or completed yet. On the weekly, we did have this bullish divergence back here, back in early 2022, versus lower lows on the price, and that actually broke up. You can see what I'm talking about. I'd like to see that on BOIL turn higher, widen the gap in the moving averages before going long, and that also broke above that previous high back there. The CCI kept rising, and you would have gained a few points had you gone long during that period. Now at the moment, it's actually broken below the moving averages of both the price and the CCI, so avoid going long. This would be a short entry only on the daily. So on the daily, since around about end of December, around this period here, you would have taken your first short positions there, and you'd still be in a trade with this one because the CCI hasn't been penetrated into that moving average range. So had you gone short back on that candle, on the daily, you're nicely up by 47% going short if you're trading that on the short side. On the intraday chart, on the 1 hour chart, remember we go short only according to the daily. So you would have taken, some of these would have been stop losses, because you can see there you would have got in, actually no, this would have been an entry there. The CCI and the price broke just below the moving averages at that point there, and that would have been a nice little gain, and you would have got out of the trade on that candle. That would have been an 18.7% gain in 7 hours of trade. Remember, this is the hourly chart. Another short entry there, and that would have been a stop loss. Another short entry there on that one, and you would have got out on the CCI breaking into the moving average down there. So that's a nice 17% gain going short in 11 hours of trade. This is a fresh entry, and you would have got in on that candle, actually that one, and that's just a break even at the moment, so just carefully watch that, and that's a short entry at the moment. And for UNG on the monthly, we've got still a bearish momentum on the price chart, although notice the CCI is broken above the very narrow moving averages, so it's a slight bullish movement. I'd like to confirm that with these breaking above the moving averages of the price chart as well on the monthly. On the weekly, we did have another bullish divergence, higher lows on the CCI, and they're still rising. The CCI is still rising versus lower lows on the price. Now that's actually broken higher, and those moving averages are starting to widen, which is a good sign. So probably, yeah, if you're going to trade on the daily, it's probably worth going long at this point. Now on the daily as well, notice we've got a few nice little bullish moves. Again, closing the position when the CCI breaks into the moving average range. A couple of little false breaks there, but again, if you're in the trade at the moment, you would have got in at that candle there, and you're currently up about 11.7% in 4 days of trade. Now, if we look at the intraday chart, remember on the intraday we're going in the direction of the daily. Take long trades. Some of these are a bit, you can see a bit volatile. You would have got in on that one there, on the breakout of that little candle there, and that would have been a nice gap up to that point. And more recently, you've had another entry there. I've measured it there with a break below the moving average of a 8% gain. And at the moment, you just would have been in a fresh breakout there, similar to KOLD, breaking even at the moment. Looks like it's going to reach this resistance, and if it breaks through that, further upside to look out for. Otherwise, we might see a bit of a pullback towards this ascending trend line. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.